Subchapter D, we got the other half of this, the import tax. So I mentioned earlier, this is the value-added tax applies to business entities in the United States. And so to keep companies outside the United States, keep us on a level playing field, if we import their goods or services, then they will be subject to a 12% value-added tax. Not a value-added tax, sorry, an import tax. So section 631 is the general rule. 12% tax equal to the customs value of the property that's coming in. There is an exemption for personal consumption. So if you're importing something for personal use, it is not subject to this tax. This is for sale or retail by a business entity. That's the purpose of the import tax. Also does not apply to petroleum, gas. These are no extra tax on those through the import tax. We will talk about it a little bit though in the carbon fee next week. And the president also has the authority by executive order to lift this import tax on commodities or products that they determine to be in short supply and vital to national security. Section 1632 is the imposition of the tax on import of services. So again, 12% tax. And how is it if you hire a computer, physical objects are one thing, right? But for services, if you hire a computer programmer who's working in the Midwest, they, as a business entity, are going to pay the 12% value-added tax. And so if you hire a computer programmer out in Asia and you import their services, then you would be responsible for paying that 12% import tax. Keep the market at a more level playing field. The liability for this tax is on the person who receives it, different than the value-added tax, where the person who sells the services is responsible for paying it. If you're importing it, then the person who receives it is responsible for paying it. What does import or export mean? It's defined by where it takes place. Important because remember, exports don't count as taxable sales. So if you're a business entity selling you're the programmer in the Midwest and you're selling your services to a company in Europe, then it's not an export. It's not subject to the value-added tax because you are exporting your services. If they take place, the entire benefit of the service will be realized outside the United States. Services acquired from a service provider that does both inside and outside the United States. That's some mild the rules around that, explaining how it's essentially where the services are reported as being provided on the invoice is how they're treated. 1634 is national transportation services. So if you are, you got a small business, your business sells things overseas. Again, the sales that you make overseas, not taxable, and taxable receipts also do not include receipts from the transportation property. So if you sell a $100 widget and you pay FedEx $20 to ship it over there, at the cost of the transportation is also not subject to the value-added tax. What about more complicated things like taking international flights? Service inside or is it outside the United States? And so these rules say you can base it on the origin. So if you're in the United States to the outside, then that would count as a taxable receipt. If you're flying back in, then it is not. And then there's also a mechanism here where the secretary can simplify it and say, look, any international flights, just count half of it as receipts. Section 235 deals with international communications. Basically, if you're making overseas calls, it's just a business expense. It's treated as provided at the point of origin of the communication. So if you're in the United States making a call, it's not an import or an export. And this includes all sorts of things like voice over internet protocols, text messaging, video conference services, all those kind of things all fall under this section. Insurance, Insurance services are treated as provided at the location of the insurance company. So if you are an American business who is insured by Lloyd's of London, for example, then you are importing an insurance service, and there will be a tax on the premiums that you pay, but any benefits that you receive would not be subject to the import tax. If it's the other way around and you're an insurance company in the United States providing services outside and it's an export, there's no tax on premiums that people outside the United States send to you, but those payments don't count as business purchases either. In section 1637, it kind of just says that it's complicated and the secretary shall prescribe regulations on the location of banking services and the extent to which such services are to be treated as imported or exported. So they'll deal with this through rules. Next, Chair, I think that concludes my testimony on subchapter D, and I'd be happy to answer any questions.
Fantastic. Yes, you had mentioned executive order, or that the president could issue an executive order for commodity items or anything that we're short for. Is there a sunset clause attached to that so that the president would be required that the executive order could only last a certain period of time, and that the president would have to re-up it every once in a while just to ensure that as an accountability measure?
No, there is no mention of a sunset clause there.
Is that something the subcommittee may consider adding?
Be happy to look at it and work on it with the subcommittee. Sure.
Fantastic. And then a question about the import tax on services. So for example, if I hired someone on Fiverr outside of the United States to design some kind of like literature, campaign literature or something, would I have to pay the import tax?
Only if you're a business entity. If you're just doing, something small, something local that you're not a business entity, no, then it doesn't apply. But if you are a business entity that over that $50,000 in out of that safe harbor, then yes, that would be yes, you'd be responsible in that case.